But now, what does it, you know, and this is the question, it's great to have some background about a recession and what it is, but what does it mean for a landlord and investor, and what does it mean in your pocket? Now, Barry and I, we're landlords, we're investors, we just want to know, you know, how is it going to affect us? Well, like Barry said, first of all, mortgage lending, they've tightened up the criteria already. Lots of new products have been pulled from the market. They're giving, I mean, normal residential, they're giving quite good rates, but buy-to-let rates are still quite high, being as though, you know, what you can get on a residential. I think you could get something like 1.1%, Barry, on a residential.
Yeah, I mean, the best rate I've seen is about 1.1, but they're averaged between 1.1 and about 1.7, if you know, for anything around 60% or less loan to value. That's the rate you can pretty much guarantee you can get that at the moment. It's really good rates.
But the buy-to-let, I know we're finding sort of between 3 and 4%. So, you know, a couple of percent higher. So mortgage lending, you know, they're also sort of devaluing the properties to de-risk themselves. So I've noticed that on a few with remortgages we've been helping landlords with, that they have actually devalued the properties. They're also looking at your income a little bit more. They're looking at your job security. They're looking also at you being on furlough payments, because say you have, they're only going to lend you 80% of the loan that you would have had, because they're taking that into consideration. So be aware of that if you're a landlord out there or someone looking to buy a property. They're looking at your income over the last 6 months. Your history is very important, your credit history. I can't emphasize that enough. Please look after that. And they will also charge you extra interest and charges on the loan. So it might be like a 2% fee for getting the loan. It obviously is added to the mortgage, but I have seen a slight increase in that, and a little bit higher rates, like we said, but to decrease the risk for themselves, the bank. Bridging finance for investors. This is when you can't get a mortgage and you're just maybe doing a flip or a development. Lots of the short-term bridging has been pulled from the market. Again, tighter criteria. Lots of the lenders are pulled out on this market already. And there's a lot more higher fees for borrowing. Like I said, sales has been quite steady, hasn't it, at the moment, Barry?
Yeah, I mean,
and I want to do this, the sales side.
Yeah, it's been pretty good. Just going back on the mortgage lending, it was something which has come up a couple of times with people who are going for mortgages. They're asking COVID-specific questions at the moment around that. So, how has COVID affected your business? So, if you're a business owner, or you might be a business owner, but you might be working for a business, they're asking questions of how's it affected your business or your company. Have you taken out a business bounce back loan if you're a business owner as well? They're taking all these things into account at the moment. So it's best to, if you are applying for mortgages, just think about how you would answer that question and how that could affect your application.
Yeah, because they are looking at this bounce back loan and putting that as a debt against you, aren't they?
Yeah, even though it's a government backed loan, there's no risk for anyone. So it just seems a bit ludicrous, but I know what our mortgage advisors they've had some struggles with some lenders on that and trying to get things through when there's been a business bounce back loan. But they are managing. There is lenders out there who will consider. So, just make sure you get your mortgage advisor to look at the whole market and see what's out there.
And so this is like a snapshot up until June of the sales market. It has started picking up, but it is a buyer's market. So if you are out there, you can get credit, you can get mortgage finance. There are people who want to sell, are people that want to move. So it might be a good time to look for properties. But again, you've got to have all your ducks in a row. And now is a good time to do that. And I think I did a video not long ago when we were in lockdown saying spend this time wisely to get all your ducks in a row, to make sure you've got your credit history looking good for when this happens. And then this is going to happen now. We've got quite an opportunity of time that you will see when all the sort of stamp duty holidays have ended. There will be a drop in prices. So if it could be a good opportunity for you to buy investment properties, especially in the sort of the Newport area, because we find then rental demand is very high. So moving on to rentals, Barry, you know, like what you said, we have seen an increase in demand. I mean, our business, you know, the demand has gone up by 35%, hasn't it, over the last few months? It's been absolutely crazy. We haven't had, you know, properties are not staying on. It says here average age to rent. This must be other agents, because what we take in maybe 3-4 days to rent a property, if that.
Sometimes there's almost a couple of properties with just the same day, because of the demand's out there. As we keep saying, if you've got good properties, we'll always find good tenants. And so, you know, making sure your properties are to a good standard, and you'll always will rent properties out. But the demand is really high at the moment.
And we're also seeing a lot of rent rises, isn't it, Barry? We've been doing sort of portfolio reviews for some of our landlords, and we can get more for their property. So we've done a lot of rent reviews, and rents have increased. And there's been a few examples of properties we've got. I mean, there was one on Albert Avenue. We increased the rent by 22%, so it went up from 450 to 550, and that rented within 24 hours. We actually had, it was a crazy amount of people. It must have been about 65 people applying for one property, wasn't it?
Yeah, it was mental, because it's, you know, it's a 2-bed property with a garden.
Yeah, 2-bed property, town centre. The landlord, it made it look nice, just, you know, new carpet, new things, just not over the top, but my gosh, it went crazy. And that's what we're finding with lots of the properties. So larger houses, maybe a bedroom, which is, you know, nicer gardens, some space, are renting. And usually people don't upscale in a recession. You know, they're usually sort of saving their money, maybe downsizing, looking to spend something smaller, keeping their money. But we found it slightly different in this start of this recession, where people are spending more on their homes, or if they're not buying a home, they're looking for a nicer rental property. Would you agree, Mary? Yeah,
absolutely. Yeah. I mean, Debbie's just asked a question: are you doing rent reviews as an automatic process, or does she need to talk to us when one comes up? To be honest, Anna's hot on this. Is, you know, whenever anything's up for rent review, she'll always look at the market and see what's going out there, and if the rents can be increased, absolutely she will do that. I mean, you know, there's some places we've managed to get some really decent rent increases. The best time to get a rent increase is when the property becomes empty and you put a new tenant in, because you can put a really big increase like we did with the Albert Avenue. But on the whole, yes, you know, we're always looking at what the market's saying the rent should be, and we're making sure that properties obviously reflect that.
Yeah, so if anyone would like, you know, even if they're not with us, or they've got a friend or a colleague who has rental properties, and you're thinking, I'd just like to see or have a rent review, please call us at the office.